If you enjoyed this podcast, please subscribe, like, and share so we can find others like yourself. Welcome to the Bitcoin Basics podcast with your hosts, Faris and Gordon from CoinCompass.com, enabling you to safely buy and securely store your Bitcoins. All resources are in the show notes and description, including our disclaimer. Visit BitcoinBasicsPodcast.com to subscribe and discover other free content.
For anyone listening, this episode is visually intensive, so visit our YouTube channel, coincompass.com/YouTube, to follow along. We use TradingView for all our charts, and you can sign up for a free account at coincompass.com/tradingview.
Hello, everyone, and thank you for joining us for another episode of Bitcoin and Markets. So we're going to do a whip around some markets today. It is Sunday, the 11th of October, and it is just past 7:07 p.m. UTC time. So what we're going to look at today, and we haven't done one of these in a while, and our apologies, it's just due to personal situations, moving house and everything. What did we do in our last episode? So we decided that it was not a trader's market. Now, this is going back probably about 8 weeks now. And we thought it was a good opportunity to accumulate gold and Bitcoin. We will see how those paid out, gold and Bitcoin. We will look at those today. We're also going to look at the S&P 500, the NASDAQ, the VIX, and silver. Oh, and to add in there, I am also going to look at US 30-year Treasury yields. So I want to start with Bitcoin. And this is a weekly time frame. And what I really like here, and if you've been listening to me, I have been concerned about the price of Bitcoin for some time now. I'll go into that for a while, simply because I still think it's a misunderstood asset class, and you've just got a lot of day traders who have been trading Bitcoin without really comprehending the value that it offers. So if we look at one thing that Bitcoin has done is it's actually been tracking the equities. So if you look at this red line that I've just introduced, now that's the NASDAQ 100. And to a T, that is tracking exactly what Bitcoin's doing. So that's my concern here, is that Bitcoin has basically been just copying risk on assets. So if they correct, then will Bitcoin correct with them? That seems to be the prevailing correlation at the moment. However, the chart's a chart. So one thing I do like here is we've got this huge inverse head and shoulders. So we potentially bottomed here at 3,600, and then we now have these two shoulders on the left and on the right there. So shoulder one over in here, and shoulder two over in here. And this same line is around $12,400 on Bitstamp. So if we break through 12,400, we hold above that, then yes, we can start testing these previous highs at 1,400 and then at 14,000, and 20,000. So the chart's the chart. What's the chart telling me? We do have this nice inverse head and shoulder in play. And if we break through this yellow line here, guys, at 12,500, we are potentially looking at the beginning of a very nice big bull market for Bitcoin. Only a caveat there is I'm just concerned about the correlation with risk assets. So let's have a look at those risk assets. So this was the S&P 500. I was looking at this chart personally a few weeks ago, and we were looking at maybe this huge megaphone trend. So a megaphone trend, higher highs, higher lows, which we've seen here. Again, this is a weekly chart on the S&P 500 and lower lows. So this megaphone is an indecision market. We don't know which way we really want to go. What I really liked here is this indicator actually came in really handy. This is when we followed a tone phase indicator. We at Coin Compass have done tone phases workshop, and it's really useful. And we saw this top on a 9 reversal. So 9s signify a reversal, an exhaustion and trend. And that definitely was the top there. And it actually came in line with this megaphone pattern as well. We then had this correction from 3,600 to 3,200. And it looks like we're reversing back up. Now, if we go above 3,600 again, then you can argue, and close above it, you can argue this megaphone pattern here is dead in the water. So unless we're forming a bigger one, but yeah, we'll look at some macroeconomic issues later, but the chart right here now is just saying, yeah, this is a really volatile market. And looking at the VIX, in our videos for a long time here, we basically said, yeah, we're expecting this gap to fill. Personally, I was really hoping the top of that megaphone pattern would have coincided with this gap being filled here in the VIX. But that didn't happen. So potentially we're still chasing gaps. And chasing gaps is an opinion. It's not a fact. It's not even a theory. It's just a self-fulfilling prophecy, if anything. So same thing with the NDX. We saw this is a NASDAQ. We just saw this wedge forming in here, and that just went exponential. And the RSI on this thing just kind of went bit insane. So the RS relative strength in this basically tells you just how exuberant a market is. And it just went too high too fast. So this is one thing that we saw is, yeah, markets don't go up forever, they do reverse. I am surprised it didn't reverse more. I thought we'd at least retest the closer to 10,000. But it looks like we're still heading up higher. So yeah, there may be more upside going into this market, which is a bit insane, to be honest. So let's look at gold. So gold formed this really nice long range here from 2013 until this year, until last year when it broke out. And they say the longer the base, the higher in space. So in this whole period, people were holding gold. And, it didn't go up and down that much. So when you're looking at something you're holding on to for years and it's really not doing much, you're not losing money, but that's not what you're thinking. You're thinking of the opportunity cost. Like we just saw a chart of Bitcoin and NASDAQ. If you'd put a lot of money in gold in this period and you're watching everything else do really well, you're getting pretty frustrated. However, it is gold and you do consider it an insurance hedge. So now that we've had this huge base in gold, it shot up. And another thing, it probably went up way too fast. Potentially, it would be good to see a bit more downside, a bit more of a correction closer to 1700, just to get that exuberance out. But it doesn't look like we have. The last 2 weeks have been pretty strong. And again, this topped up on the tone phase 9. So we saw that 9 weekly indicator there. That definitely was the top. And yeah, we're not yet heading higher, but a break above 2,000, and I'd say we're heading higher. So it would just be good for this RSI here, just to stabilize a little bit more. But it has turned up. It's turned up from a medium-term level. But you can see here, the 9 there, the RSI 80, those were indications that it was just got ahead of itself. Same thing with silver. Silver had this really long base forming as well, broke out. And last week's candle, really, really strong candle. So yeah, it might be a bit too soon to get back into silver, but we do have some nice bottoms here, and your downside is not too far away at the bottom of this base. I don't see them revisiting these baselines. So you know where your stop loss can be. And again, you're looking at a long-term scenario here. Like I'm talking a yearly time frame for gold and silver. The other thing that I wanted to look at was the US 30-year yield. So yields going down means bond prices are going up. And bonds have been in a bull market since 1986. And a lot of people are wondering if that bull market's come to an end. Big picture, it's still in this channel. So yields going down basically means that, if you're buying sovereign bonds, you get a yield return. So it used to be 9%. Imagine that, buy $100,000 worth of bonds and you're getting 9% yield. Now that yield has been coming down because people have just been buying bonds. So look, some people are saying that this was the bottom here. Podcast I was listening to this weekend, people believe that was the absolute bottom right there where we just bounced off. Who knows? It could be that, again, went down way too quickly and we just need to consolidate. So there are a lot of factors in macro markets at the moment we need to take into account. So U.S. elections are 4 weeks away. The biggest concern is as if what parties are saying at the moment, they might contest these elections, in that no, regardless of which party wins, the other party will not concede. Imagine this is what happened in 2000 between George W. Bush and Al Gore. It ended up going to Supreme Court. Now, if we do that, we're in a time where we're already seeing riots, protests, civil unrest in America. Who knows what that could do to the country? We saw President Trump contract COVID, and really it did not affect the markets, barely at all. We're still in a global economic shutdown. Borders are not opening. I was looking at a report saying borders might not open until March or April next year. And the other thing to consider is government stimulus. So when COVID happened, a lot of governments basically just, in essence, started handing out money. So giving people money because we live in a global consumer economy and people need money to spend. We didn't want them going bankrupt. We didn't want house foreclosures. We didn't want a global repeat of 2008 or 1929. But what happened when people got money is they're stuck at home, nothing to do. We all have good internet access these days. So we introduced a whole new series of day traders. And there's a couple of articles here basically saying everyone's a day trader. And this is my concern, is that, yeah, trading's been made very easily, but it is very difficult to trade successfully and well. And with everyone just buying in, saying, well, the government's basically, government's buying markets. In some countries, governments are buying equities or ETFs directly. Swiss National Bank, Swiss Reserve Bank, print money, buy shares in Apple. So when you got people making money and buying something, you just basically follow in their shadow. It's like, feeding off of the whale. But what happens when things turn? And this is my concern for Bitcoin, is if we've got all these day traders trading Bitcoin like they're trading stocks, they're not really understanding what Bitcoin is. And so we could, if we do get a flush where, let's just say, and they're in negotiations now, Trump and the Democratic Party are in negotiations to extend these government benefits. Well, what happens if they don't? What happens if that paycheck you get all of a sudden is not coming in? Well, you'll want to sell what you've been day trading. What happens when everyone sells at once and there's not enough buyers to pick up? That's when we could get a real flush in the system. So, and that's my only concern with Bitcoin, is that you've just got a lot of new people that are day trading it and not doing what we recommend, which is just buying incrementally and holding for the long term. So looking at today's markets, gold and silver look like really good setups. If Bitcoin does close above this neckline, then yes. But again, we're going into the election 4 weeks from now. There's going to potentially be a lot of volatility. I personally am not going to be putting in any new trades. I'm just going to wait and see what happens, and might not even start trading again until February of next year. So I hope this was beneficial. If there's any markets you want us to look at, please just send us any queries. And thank you again for your time, everyone.
If you enjoyed this podcast, please subscribe, like, and share so we can find others like yourself.
Thanks for watching or listening. Please visit coincompass.com/free to register to our socials and discover other free content. Subscribing, liking, and following helps this content remain ad-free. Until next time.